Hello, and welcome back to the channel. I'm Algabot, and today we're exploring an expert advisor for MetaTrader 5 called Volatility Stability Breakout. This strategy takes a fresh angle on channel breakouts. Instead of only asking whether volatility is high or low, it asks whether volatility is steady or erratic. It combines a Donchian channel breakout with a volatility-of-volatility regime filter built from the average true range. By the end of this video, you'll understand exactly how it reads the market when it opens and closes positions, and how the code puts it all together. Let's dive in. So what exactly does the Volatility Stability Breakout Expert Advisor do? At its heart, it's a breakout strategy, but with an unusual filter layered on top. Most breakout systems focus on the size of volatility, asking whether the market is quiet or active. This approach adds a second question that is rarely used. Is the volatility itself steady, or is it jumping around from bar to bar? To measure that, the strategy builds an average true range series, and then calculates the coefficient of variation of that series over a look-back window. In plain terms, it divides the standard deviation of recent ATR readings by their average. The strategy calls this the volatility of volatility. A low reading means the true range has been consistent bar after bar, describing a calm, orderly market. A high reading means the true range has been erratic, the kind of environment where breakouts often reverse sharply. The trade signal itself comes from a Donchian channel, which simply tracks the highest high and the lowest low over a set number of bars. When the most recent completed bar closes beyond that channel, and the market is in a steady regime, the strategy treats it as a genuine breakout. It works symmetrically, taking long positions on upside breaks and short positions on downside breaks. The default settings point toward liquid intraday forex, such as the euro-dollar on a 15 or 30-minute chart, though the logic isn't locked to any single instrument or time frame. It runs on whatever chart you attach it to. In terms of trading style, this is a systematic, rules-based trend-following approach that aims to participate in clean directional moves while stepping aside when conditions look choppy and unpredictable. Remember, this is educational information only, not financial advice. Let's walk through the mechanics step by step. The expert advisor works on completed bars, so it makes one decision each time a new bar opens, using the bar that just closed. First, it measures volatility. For every finished bar, it calculates the true range, which is the largest of the current bar's high to low distance, and the distances from the previous close to this bar's high and low. It then defines the average true range as a simple average of the last 14 true ranges, using the ATR-period setting. Next comes the regime filter, the defining feature of this strategy. Over a window set by the vol window parameter, 20 bars by default, it takes the recent ATR readings, finds their average and their standard deviation, and divides one by the other. That ratio is the coefficient of variation, or the volatility of volatility. If this value sits below the stability threshold, which defaults to 0.22, the market is judged to be in a steady regime and trading is allowed. If it's above the threshold, the regime is considered too erratic and the strategy simply waits. Then it builds the Donchian channel. It looks at the bars immediately behind the just completed bar over the channel period length of 20 and records the highest high and the lowest low. If the completed bar closes above that highest high, that's an upside break. If it closes below the lowest low, that's a downside break. There's one more filter, expansion confirmation. The breakout bar's own true range must be at least as large as the current ATR. This checks that the break is a decisive move rather than a marginal drift across the line. When all conditions align, a steady regime, a confirmed break, and an expansion bar, the strategy opens a position. An upside break opens a long, and a downside break opens a short. Position management is straightforward. Each trade is protected by a stop loss placed 1.8 times the ATR away from entry, and a take profit set 3.2 times the ATR away. That's a reward-to-risk framework of roughly 3.2 to 1.8. On top of that, if an opposite break appears while a trade is open, the strategy reads it as a regime flip and closes the position early. Only one position is held at a time. Let's look at the actual MQL5 code that runs inside MetaTrader 5. At the top are the input parameters, the settings you can adjust in the expert advisor's properties. ChannelPeriod, defaulting to 20, is the Donchian length the break must clear. ATR period is the average true range length, used both for the stops and as the base of the volatility-of-volatility series. Vol window is the window over which the coefficient of variation is measured. Stability threshold, at 0.22, is the gate. The strategy only trades when the volatility-of-volatility sits below it. SlATR multiple and TpATR multiple set the stop-loss and take-profit distances as multiples of ATR, and lots is the order size. In the middle block, the code computes vol as the square root of the ATR variance divided by the mean ATR and marks the regime as steady when that value is below the threshold. It then reads the close of the just completed bar and compares it to the channel high and channel low to set broke up and broke down. The expansion flag checks that the breakout bar's true range is at least the current ATR. If the regime isn't steady or there's no expansion, the function returns and nothing happens. Now the two signal blocks. If broke up is true, the code takes the ask price, places the stop loss below it and the take profit above it, both scaled by ATR, and calls trade.buy to open a long. If instead broke down is true, it takes the bid price, places the stop above and the target below, and calls trade.sell to open a short. Both sides are perfectly symmetric, sharing the same regime filter and the same ATR-based risk framework. Now let's bring the whole strategy to life on a chart. On screen you can see a candlestick sequence with the Donchian channel drawn as an upper and a lower boundary across the price. Below the price is a subpanel showing the volatility-of-volatility, our coefficient of variation of ATR, with a dashed line marking the stability threshold at 0.22. Everything below that line is the steady zone, shaded green, and everything above it is the erratic zone, shaded red. Watch how the two work together. Look at the first few candles on the left. Price is chopping back and forth inside the channel, and notice where the volatility-of-volatility sits, up above the threshold in the red erratic zone. During this stretch, the true range is jumping around from bar to bar, so even though price is bouncing near the edges of the channel, the regime gate keeps the strategy on the sidelines. This is the heart of the idea. Not every breakout deserves to be taken. Now follow the subpanel as we move right. Over the next few candles, the volatility-of-volatility drifts lower and crosses down into the green steady zone. The market is settling into a calmer, more orderly rhythm. Price begins to coil just beneath the upper channel, pressing against that highest high boundary. Then comes the key candle. A wide, decisive bar closes above the upper channel. Its own range is at least as large as the current ATR, so it passes the expansion check, and the volatility-of-volatility is comfortably below the threshold. All three conditions are satisfied at once, and the buy entry marker appears. The strategy opens a long, placing its stop loss below the breakout at 1.8 times the ATR, and its take profit above at 3.2 times the ATR. From there, price follows through. The next candles push higher, extending the move in the direction of the break, until price reaches the take profit target and the long is closed for a completed trade, marked on the chart. Notice how the trade unfolded during a calm, steady stretch. Exactly the environment this strategy is built to look for. After that advance, price stalls near the highs and forms a small consolidation. The volatility-of-volatility stays down in the steady zone, so the strategy remains alert. Price is now hugging the lower channel from above, and that boundary rises as the recent range tightens. Now watch the second setup, this time to the downside. A firm bar closes below the lower channel. Again, the expansion check passes, since the breakdown bar's true range meets the current ATR and the regime is still steady. The sell entry marker appears, and the strategy opens a short. This time the stop loss sits above the entry and the take profit sits below, both scaled by ATR in mirror image to the long. Price then works its way lower, candle after candle, following through on the downside break until it reaches the short take profit target, where the position is closed. That completes the second trade. Step back and see the pattern. In both cases, the strategy waited for the same three ingredients: a steady volatility regime below the 0.22 threshold, a clean close beyond the Donchian channel, and an expansion bar to confirm the thrust. It stayed out while the volatility-of-volatility was erratic, and it engaged only once the market calmed. Long and short are treated identically, with the same reward-to-risk framework of roughly 3.2 to 1.8. And remember, if an opposite break had appeared while either trade was open, the strategy would have read that as a regime flip and closed the position early. This is a clear, illustrative example. Real markets are far messier, and losses are a normal part of any strategy. That brings us to the end of our look at the Volatility Stability Breakout Expert Advisor for MetaTrader 5. We covered its core idea, measuring the steadiness of volatility through the coefficient of variation of ATR, and using that as a gate on a Donchian channel breakout. We walked through the entry and exit rules, the ATR-based stop-loss and take-profit, and we read through the actual MQL5 code for both the long and the short side. Everything here is educational information only, and nothing in this video is financial advice or a recommendation to trade. Trading carries real risk, and losses do happen. If you found this analysis helpful, please like the video, subscribe for more MetaTrader 5 strategy breakdowns, and leave a comment with strategies you'd like to see next. Visit us at www.algobot.live. Past performance does not guarantee future results. Trade responsibly.